Welcome to Chapter 4. Here we are going to talk about end-of-period procedures for a service business. And again, you're going to use the exact same file that you've been using for chapters 2 and 3. If by chance you have any comments about those chapters, you need to go into the exact same files and make those changes. Do not start all over. You need to have these build on each other. So in this, we're going to talk about how do you make changes to the chart of accounts, how do you do adjusting journal entries, how do you look at the bank reconciliation, and how to do closing entries. So all sorts of exciting stuff in Chapter 4. The first thing we want to talk about is our chart of accounts, and we've been in here several times, and it is under lists, and I already have my file open, so you'll need to get yours open also. So chart of accounts, and in here you can make a lot of changes to these chart of accounts. So for instance, if I decide that I no longer want I want to abbreviate this. I don't like the way it looks, so I want to abbreviate miscellaneous. I can go here, I can right click, I can go to edit account, and I can change it. So I decided to change it there. Save and close, and now it shows up as an abbreviation. But now let's say that I no longer want to use this account. I set it up there, and now I no longer want anything to go into miscellaneous. I can right click, and then I can make account inactive. But wait, it disappeared. What if I need it back? So you can go down here to account, and show inactive accounts, and this miscellaneous has an X by it because it is inactive. So sometimes you have an account that you've been using and you don't want to use it anymore. You can't delete it, but you can make it you can make it inactive. Now let's say you completely want to delete that account. You never want to see it ever again. You can go right here and go to delete account. Are you sure? Okay, it's gone. Now it's completely gone. Now, if you have transactions posted to an account, you cannot delete it. QuickBooks will not allow you to. You can make it inactive so that people cannot use it going forward, but you cannot ever delete it. You would have to go back and reclassify every single one of those transactions in order to be able to delete that account. Okay, and then we move on to adjusting journal entries. As a reminder, when you do adjusting journal entries, you debit expense accounts. In order for us to do adjusting journal entries, we actually do those in the general ledger, or in the general journal, general journal. And we go to accountant, and then we go to make general journal entries. And this is going to look very similar to what you did in 129. We actually enter the debits and the credits. QuickBooks is not going to do these for you. These are ones that you're going to have to calculate and do them. Okay, so for instance, if we're going to do a depreciation, we debit depreciation expense, and I'm just going to make a number up of 1,000, and then we do accumulated depreciation. Okay, and so I want to talk about something else really quick. So here, if I didn't know this, I could use the drop-down box, and I know I'm looking for an expense. And so, excuse me, I've got the yawn still. I would go here, and I know I debit my expenses, and so I would select depreciation expense. But now I know I have the accumulated depreciation, and it is a balance sheet account. So I'd go up here and I would find my fixed assets, and here I have company cars and I have office equipment. But if you'll notice, the two sub accounts under there are original cost and depreciation. This really should be accumulated depreciation. This textbook does not use accumulated depreciation. I somewhat disagree with them. So you'll need to go and find the fixed asset depreciation, which should be accumulated depreciation. And then you would do June adjusting entry as a memo. And that memo is used so you know what to do later. Okay. And now I want to go back over here to accountant, or excuse me, lists, and I want to go back to this chart of accounts. So here, anything that is right out against this far left-hand corner is a master account, and anything that's shoved just slightly over is a sub account, So for instance, professional fees, we have two sub accounts, accounting and legal fees. We don't ever post anything to professional fees. We have done this because we want to separate out our professional fees by accounting and legal. So this just tells us what type of fee it is, and here is exactly what we want to categorize them as. And again, we don't post anything to professional fees, we post them to accounting and legal fees. Same thing back up here with our fixed assets. Company car and office equipment is our master accounts. We don't post anything to those. The only place we post things to is depreciation and original cost. So one of the other adjustments we make is supplies. First, we have to figure out how much supplies we have on hand. So one of the ways to do this is to pull up our chart of accounts, and it tells us we have a balance of $500. So if the problem were to say we have $300 left on hand, we need to make an adjusting entry to get our balance to $300. And we go to accountant, make general journal entry, supplies, expense, of which we don't have, and we can add that. It says it's not on the account list. Do you want to add it? I sure do. And we decide that it's an expense account. And you'll have already done this in a prior chapter. And save and close. And we're going to do an adjusting entry for $200. And supplies. Oh, where is my supplies account? Office supplies. And I'll bet this is office supplies expense right here. So office supplies expense. So I didn't need to add that office supplies expense. So whatever the asset is, we just add the expense to it to adjust to actual supplies on hand. And if you look right here, we click that these are adjusting entries because there's a specific report we can pull that will just pull our adjusting entries and not all of the journal entries that QuickBooks has prepared for us. So this is an important item. And hit save and close. And now I want to show you the report. We can go to taxes, and we can go to adjusting journal entries, and I can do all. And there's the two adjusting journal entries that I've made. There's lots and lots and lots of reports in QuickBooks. And so we will do adjusting journal entries every chapter going forward. And so you may want to mark pages 217 to 221. Okay, one of the other things that this chapter talks about is owner withdrawals. Owners take money out of a business all the time. And so I'm going to run home, and when owners withdraw, we write a check to them. So we're going to pay to the order, and my name is Candace Boziger, and it's going to say, wait, she's not in there. So we can just do quick add, and I am an other because I'm not a vendor, I'm not a customer, I'm not an employee. And let's say I wanted to take $1,000. And my account, that would be an equity account, and it's a draw. So right here under my equity account. And your name should be here under your capital. And it's draws, and then I would hit save and close. And now if I go over here to my check register, it shows right here that I have taken out a $1,000 draw. Now, when owners make additional investments into the business, we have to do that through general journals. So we're making a journal entry, and I am going to put $10,000 into my checking account. So I'm going to debit it because it's going to go up, and I've got an extra zero in there. My cash balance is going to go up, and my credit is going to go to my equity account of investments. And I'm going to do investment by owner. Save and close. Oh, and one thing I need to point out, so I can hit this back button. I can hit the back button. And if this is not an adjusting entry, I just need to unclick that. And all that affects is what report it shows up on. So if it's adjusting, make sure you click it. If it's not, make sure you unclick it. And then if I go over here and I go to my check register, it now shows I've made a $10,000 deposit. So although I made it in the adjusting entry, or I made it in the general journal entry, it still shows up in my checking account register. Okay, one of the last things that is covered in here is a bank reconciliation. We did those by hand in 129, and QuickBooks automates it, and it's way cool. It's one of my favorite things to do in QuickBooks. So if you go to banking and reconcile, and I would have a bank statement in front of me, and I would put in the ending balance. And I'm just going to put in a $13,000 balance. I'm never going to get this balance, but I just want to show you how this process works. And then a service charge. This would be the charge that the bank has, or the service fee that the bank has charged me, and then I can go in and put it's a bank service fee. You get to select what account this goes to. And let's say I earned 67 cents in interest. I can also tell it what account that is. That would be an income account. Interest income. It's other income. If you'll remember, interest income is reported down in the other section of our financial statements. I'd hit continue. And then this pops up, and anything that is voided is automatically going to be checked. And then I would compare this to my bank statement, and I would say, okay, this $25,000 check has cleared, this $10,000 check has cleared, and then I'd go through and I'd mark each and every check that has cleared. And when I get to the end, our hope is that right over here, this difference is 0. That is the whole point of this, is to have this to be a 0. If it doesn't, there's something wrong. So that is the bank rec. Now, one of the other things we have to do, and it is listed on page 248 and 250 in your textbook. I'm going to pull up a balance sheet really quick. And right down here, it shows that we have a negative $3,500 in net income. And this is our retained earnings, but we need it to go up into our capital account. And so the textbook walks you through the process of doing that on pages 248 through 250. This is a very important step in QuickBooks. This is one of the things that QuickBooks does not automatically do, and us as bookkeepers or as business owners need to be transferring those to their capital account. For those of you who took my 129 class, remember we cleaned out the income and the expenses with the filing cabinet example, and everything ended up in owner's capital. And for those of you who've taken 129, everything is closed out to owner's capital, all our temporary accounts. QuickBooks closes all of our temporary accounts to an account called retained earnings, and we have to make adjustments for those retained earnings back into the capital account. The other thing we have to do is we have to close out draws, because QuickBooks does not automatically do those. So those are two items that we have to do manually every single time we get to the end of a period, and whether that end of the period be the end of the month or the end of the year. The other thing I want to point out is there is a mistake in the textbook on page 251. The textbook shows a picture of a balance sheet. You actually will not match those numbers on that balance sheet until you reach page 255. So just go ahead and keep going once you get to page 251, and you will be able to get the correct answer once you have gone through page 255. And good luck with chapter 4, and of course if you need anything, please feel free to contact me, and I would be more than happy to help in any way I can, and good luck on chapter 4.